Hello everyone. Yesterday in the aftermarket hours, Indian Ministry of Statistics released the October month consumer inflation data, and in addition, some famous investment analyst firm released their opinion about the Indian company earnings. So in this video, first let's discuss those in detail and then we can discuss our regular pre-market report for today 13th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, about October month consumer inflation macro data. If required, please pause and have a look. The orange curve is the food inflation and the blue curve is the consumer inflation. As we see here, after 14 months, for the first time, consumer inflation exceeds the RBI target. For the last October month, it came as 6.21%, and the main influence for this elevated inflation is due to the food inflation. Again, if required, please pause and have a look. This is the very interesting table which explains how much of the each components like food, fuel, housing and transport etc. all contributes to the inflation. We know the main contributor was food inflation. In that food inflation, the major contributor was vegetables, which increased over 42% compared to a year ago. Even on the September month also, it increased 36%. It looks like vegetables increasing more than most of the investors and analysts. Anyway, jokes apart, the reason for the vegetable increase is mainly due to the flood across various parts of the country and also mainly due to the base effect. 2023 October month and 2023 November month were the 2 months which had very low vegetable inflation due to the unexpected normal monsoon. So I'm afraid even on November month we can expect high inflation, and then after that possibly it might become normal. That's the short-term inflation outlook. But the problem right now is because of this high inflation, most probably in the next MPC meeting in December 6th, RBI might keep the interest rate unchanged, which clearly market don't want, and macro wise it's a clear negative. However, on the positive side, there is another macro, industrial production growth. In the August month, unexpectedly it was contracted. However, after that for the September month, analysts expected the 2.5% increase, whereas the data beats the expectation and came as 3.1%. This is the first positive. Then the second positive, there was a rumor floating around yesterday that in order to meet the yearly target capital expenditure, Indian government is going to relax their quarterly spending limits. So for today, market might react for all the news, but by chance, if there is an official announcement regarding capital expenditure increase on any day, that might increase the market like crazy. So that's it about the macro. Now moving to the second topic, what various analysts say about Indian company earnings. First, London Stock Exchange Group, they said so far in the Nifty 50, 44 companies released their earnings, and in that 20 beats the expectation, 5 came in line with the expectation, and 19 missed their analyst expectation. So I think the overall picture in Nifty is not that bad, but if we consider the broader market, the situation is pretty bad. If required, please pause and have a look. First, Motilal Oswal, after the quarterly results so far, they released the report on 166 companies, and altogether their earnings dropped 8% and 35% number of stocks beats the estimation, whereas 65% number of stocks comes either in line or missed. Whereas on Morgan Stanley case, 51% beats the estimation and 49% missed or in line. Then in Axis Capital case, it's very worse. Only 19% beats the estimation and 81% either missed or in line. And finally from Jefferies, so far they analyzed 121 companies and they downgraded 63% of those. So overall, in one simple sentence, this is the worst quarterly performance of the Indian companies after March 2020. So that's all about those two topics. Now coming to regular pre-market stuff about US market, last night one of the FMC member Neil Kashkari in his interview, he mentioned that a surprise inflation increase could push the Fed to pause the interest rate, rather cutting 25 basis points in the December month, which in turn increased the 10-year bond yield and made the US market to trade and close negative. Dow Jones decreased 0.86%, S&P 500 down 0.29% and Nasdaq marginally down 0.08%. In case of VIX, it dropped near 2% and still between 14.5 to 15. In line with that, early morning today, GIFT Nifty further decreased and closed at 23,872. Equating it with the spot market, it's indicating the gap down opening of 50 to 70 points. About Indian ADR, all four major stocks closed negative, but even in the Indian market also all closed negative. So if we consider arbitrage, IT not showing any fresh negative sign, whereas both banks indicating further negative. In terms of Reliance GDR, it's marginally negative. Then regarding oil, OPEC's future oil demand report pushed it down to 2 weeks low. At the time of this video, WTI crude trading around $68 per barrel, whereas Brent crude traded at $72 per barrel. These are the things from yesterday's global market. Now let's move to new India related info. Yesterday also in the cash market, FII was net sellers. Honestly, I don't know when they will stop selling. Yesterday, they net sold for 3,000 crore rupees and DA net bought for 1,850 crore rupees. Then regarding open interest volume analysis, surprisingly yesterday market was pushed down by retail traders. If you see the option market, they unwound 10% of their sold put option and 15% of the bought put option. In addition, they sold crazy call option. I mean, their both long and short put call ratio is around 0.6% and they increased their short position in the index future market as well. So I think yesterday market was down because of panic among retail traders. Anyway, for the full complete analysis, please refer the YouTube community page. As a summary, because of the US consumer inflation data released tonight, I think global momentum is paused. So Indian market might trade with some cautiousness. However, there is a chance for short covering as well. But for now, GIFT Nifty indicating the gap down opening above 50 points and with bad macro high retail inflation. About the things to look out, Eicher Motors, Alchem Lab, Apollo Tyres, Vodafone Idea, AstraZeneca Pharma, Deepak Nitrite, Godrej Industries, Kalyan Jewellers, PI Industries and Sun TV Network are some of the major Indian companies' earnings results are still released today. Regarding macro, as I said earlier, for US, very important US consumer inflation and some FOMC speech are the important items we need to keep an eye out today. Coming to technical, Nifty opened 80 points gap up. However, it then erased all and in the afternoon dropped all the way down to 23,840 and closed below 23,900, the lowest level since June 26. Thus, on the daily chart, Nifty formed a long bearish candlestick pattern and continued the lower low for the fourth consecutive session. And in addition, other than 200 moving average, Nifty traded below all the major moving average and it slipped from its recent consolidation, all indicating growing negativeness in the market. Hence, in the short term, Nifty might move towards 23,600 to 23,650 range, while the immediate resistance on the higher end is at 24,000. In case of Bank Nifty, it opened 180 points gap up and then dropped more than Nifty and closed around 15,150. Thus, on the daily chart, same as Nifty, Bank Nifty formed a long bearish candlestick pattern with a continued formation of lower low for 4 consecutive days. However, yesterday Bank Nifty volume was low compared to the previous 5 sessions. Overall, Bank Nifty has been consolidating in the range of 50,500 to 52,850 for the past few weeks. Hence, if it falls below 50,500, then that could cause fresh selling pressure. Otherwise, it will continue its consolidation. Regarding the weekly options data, the maximum call option open interest was at 24,500 strike, followed by 25,000 and 24,200, with maximum new call option writing at 24,000 strike, followed by 24,200 and 24,100. On the put side, the maximum open interest was at 23,000 strike, followed by 23,500 and 24,000, with maximum new put option writing at 23,900 strike, followed by 23,200 and 23,400. Thus, from options data, 23,500 is likely to be the next support, while resistance is at 24,000 to 24,200 zone. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.